Good morning. How are you? Good. The last day of our class. I can't believe it. I baked. Listen, I'm pretty well known for my chocolate chip cookies. Not from Belgium. Had a few different irons in the fire yesterday when and by irons in the fire, I mean little kids running around. So, yeah, last day of our class, as I mentioned to you numerous times, we are not learning anything new today. It is going to be a complete review for the final exam. If you scroll down to the bottom of our Moodle site, first, I want to bring to your attention that the writing assignment, the final draft of it, is due by midnight tonight. That is a hard deadline in the sense that if you submit after that, you'll start to lose points. But that is not a hard deadline in that if it takes you a couple of more days, please allow yourself a couple of more days. I would rather you earn some points than no points. If you feel like, oh, by midnight tonight, you don't turn it in, that's the end of the story. No, turn it in late. You are going to lose points for a late submission, but please spend time on that final draft. Some of you sent me emails saying, I'm not sure where the feedback is. So what I did was I sent each of you that submitted a draft, I sent it back to you and I used review comments. So when you open up your Word document, there should be little like bubble icons on the right-hand side of your Word document. And when you tap on one of them, all of my comments appear. And as you tap your way down each of the comments, you can see like the portion of the memo that is highlighted that relates to the comment. Okay. So it's not just, sometimes I just put general comment and it's just a general note like, hey, you could use a little bit more of a professional tone. Try not to make this sound like a casual conversation, just a general something. But usually it's specific and I highlight the portion of the memo that the comment relates. So keep that in mind. But then we're focused on the final exam, that you're going to be taking in this room on Friday, starting at 4 o'clock. Okay. Here are the topics that we are looking at for the final exam. Number one, a bunch of journal entries. I'm going to do a problem with you in class today that looks very similar to the one that you'll see on the final exam. A bunch of journal entries. Okay, here are the financial transactions for this organization over this period of time. Make the entry for each one of them. In that example, you will have, you will have a chart of accounts, right? Remember, the chart of accounts is the list of all the account names that you have to use them at least once in your entry. So we'll go through that today. Preparing financial statements. So I will give you a trial balance in Moodle. And in Excel, you'll have a template to prepare your income statement, statement of retained earnings, and your balance sheet. We did one of those in class together already for additional practice, but I have another one. I'm not sure if we'll get all the way through it because I want to make sure we get through the journal entry problem because we haven't done sort of a big fat journal entry problem for a while since like the beginning chapters. We've done journal entries almost every day, but not a big fat problem like that. Then the statement of cash flow. So that's the last chapter we covered, chapter 12, where we are, or I am going to present to you a series of cash flows. We received cash from the sale of common stock. Okay. And you have to identify, is that cash flow an operating activity, an investing activity, or a financing activity? The answer to the one that I just gave you is it's a financing activity. If we sell common stock, if we receive a loan from a financial institution, those are financing activities, okay? And we discussed all of that in chapter 12. And then finally, you will see one of these three, one of them, you don't know which one, it'll randomly be assigned to you when you open your exam, one of these three as a short answer question, okay? So in chapter 11, we talked about that a business, if you are running a business, you can legally set that business up in a variety of different ways. The one that we focused on was a corporation. And in that chapter 11 lecture, we talked about what are some of the advantages of setting your organization up as a corporation and what are some of the disadvantages. You should be able to explain those in your own words. In chapter 10 and 11, we talked about if a company wants to raise a large sum of money, they essentially have three ways that they can do that. They can go to a bank and get a loan. That's a long-term note payment. They can sell common stock out in the public to investors, right? That was chapter 11, the equity chapter. And then sort of in the middle are those bonds, where it's kind of like a loan because it's money that you have to pay back, right? But it's kind of like common stock because you don't pay that money back to a bank, to a financial institution. You pay it back to individual investors that have given you their money, okay? You should be able to explain those in your own words. Again, that was from chapters 10 and 11. And then finally, also in chapter 11, when we talked about equity, is when you own a share of common stock of an organization, what does that mean? What do you have the right to do? What are some of the characteristics of being a stockholder? Again, we talked about that in chapter 11. You should be able to explain it in your own way. You're going to get one of those three as a short essay question on the test. 4 questions on this test. That's it. 11. Any questions? Okay, so you're going to open up your final exam and the first 2 questions, you're going to put your answers in the Excel template that I've given you. The second 2 questions, the cash flow question, and then one of those 3 essays, you're just going to type your answer right in Moodle. Make sense? Okay. So in Moodle, we already did one financial statement practice problem. Here is the template. Here is the solution. We did a bunch of sort of separate journal entry, like transaction problems from chapters 7, 8, and 9. Here is the template. Here is the solution. What I would like us to start with today is this comprehensive journal entry problem, okay? And when you open that comprehensive journal entry problem up, it will look like this. The first tab, which I'm actually going to project on that screen, if I can figure out how to do that. Yeah, there we are. So the first tab is just a bunch of entries. And then the second tab, which I'm going to keep up on this slide. So we're going to go through it together. I'm going to give you like 20 minutes to work on it with your friends around you. Okay. And then when we go through it together, I'm going to keep the journal entry transactions up on one screen. And then we're going to do the solution together on the other. Okay. Remember to use the chart of accounts. Don't sit there guessing and trying to remember what account names you're supposed to use. There's a list right there. Use it for reference. Use it as a guide. Okay. So this is where we're going to start. However long this takes us, whatever remaining time we have left in class, we'll jump into that other financial statement problem where I give you a trial balance and you do 3 financial statements. Okay. Yeah. No. Yes. There will be, I'm wearing sleeves, but there's no tricks up them. There's not going to be an account name in that list that I just randomly throw in there to confuse you. You have to use at least one time each one of those account names. Make sense? Everybody understand what we're doing? Okay, go ahead and get started. Let me know, raise your hand if you have any questions. My expectation is that you're talking with your friends around you to get these done. You can move if you want to get closer to a friend that you like to work with. And then in about 20 minutes, we'll come together and go through the solution. Okay. So the first transaction, again, transactions on the right, we're going to do the answers here on the left. On January 1st, we received $140,000 in exchange for common stock. Someone raise their hand and tell me what's the entry that I'm going to make on January 1st on that first, for that first transaction. Michaela. and credit common stock, 140,000. Any questions? What if that said we received $140,000 cash as well as a piece of equipment worth 50,000 in exchange for common stock? Ivan, how would it change? Debit the equipment, and then what would the common stock be? The sum of the two, right? Keep that in mind. On the 18th, what happened? We purchased supplies for 10 grand. Jared. That's right. Oops. 10. And again, remember, you might use, obviously, we just used cash twice in the first two transactions. You might use these account names more than once, but you have to use each of them at least one time in your journal entries. That is how the exam will be set up. There aren't going to be any curveball account names in there that you're not gonna need. Okay, how about February 1st? We took out a short-term loan for 30,000. The loan is due in 4 months and has an interest rate of 5%. February 1st, what am I doing in my entries in my journal on February 1st? Skylar. Yep. What's cash? Your debit, your credit? Yep. Everybody good on that one? What if this said you purchased a building for $200,000, but you had to take out a loan to do it? Logan?
Building and long-term note.
Depending on what the specifications are. If it was still the same, if it was still due in 4 months, it would still be short-term note payable. But exactly, the asset just changes, right? Instead of getting cash when you just take out a loan, you received another type of asset, a building, a piece of equipment, whatever. Okay, March 1st. On March 1st, we purchased furniture and computers, and we paid for that total in cash. Z. Office furniture, computers. You said office supplies, office furniture, computers, and then what was the third? I'm sorry, and cash. So the office furniture has a value of the computers. So how much cash went out the door? Right, the sum of the two. So again, practicing Excel formulas. If I just take the 20,000 plus the 9,000, or I know you could do that math in your head, but just looking at it from an Excel point of view. Okay. How about the 31st? We provided consulting services for a new client, 5,500. Oh no, I'm sorry. The 12th. I skipped one. The 12th. Provided consulting services for a new client worth 7,500. The client is going to pay us in 1 month. Ivan. Any questions on that one? Now, the 31st. Provided consulting services for a new client worth 5,500. The client agreed to a short-term note. They have to pay us in 5 months, and the note carries a 4% interest rate. Jared.
Ready?
So same thing on the 12th, except now they agree, like we have a note, right? Longer period of time, interest rate associated, so we have to use the right account. It's important that we differentiate between regular accounts receivable that we just have with all of our customers and these notes because they carry an interest rate and that makes them different. Good. How about the 12th? April 12th, we received cash from the customer for the services that we provided to them on March 12th. So we already performed the service. Right now, the customer is paying us. Jacob. Cash, account, receivable. What's my debit? What's my credit?
Cash.
You are going to see one like this on the test. I promise you. Don't account for revenue twice when you only performed the service once, right? March 12th is when we perform the service. March 12th is when we get the revenue. That's when we get to account for the revenue in our journals. April 12th is just cash in our pockets. Don't record revenue twice for work that you only did once. Yes? Okay. May 1st. We purchased office supplies totaling $3,000 on credit. Ivan. Purchase supplies on credit. Any questions on that one? Bless you. May 31st. We paid off the loan. This is going to require a little bit more work, right? Because we had a loan outstanding from February 1st, short-term note payable, and that loan carries an interest rate of 5%. It's given to us in the problem. But what we have to do is figure out how much are we going to pay back when we include the loan plus the interest amount that we are going to owe, okay? So on the right-hand side, the first thing I want to do over here is calculate the interest. How do I do that? Jared. .05, exactly. Right, so if you look on February 1st, it tells us the loan was 30 grand and the interest rate was 5%. But Jared, that represents how much interest? Annual interest. Did I have the loan outstanding for a full 12 months, Joe? No, I didn't. How long did I have the note outstanding? Tells you in the problem, right? 4 months. So I need to turn this annual interest into 4-month interest. How do I do that? Divide by 12. That gives me monthly. And take that monthly amount times 4. That gives me 4 months of interest. So now I'm ready to go. On May 31st, I'm going to pay off the amount that I owe plus the 4 months of interest. And I need to account for that in my journal on that day. Ivan. Stop there for a second. I'm debiting short-term note payable because I want it to go away, right? That liability was put on my accounting records on February 1st, and now I want it to go away. So I remove it with a debit of 30,000, right? I want that to be 0. I want it to be 0 because today I'm paying, right? So I don't want to show that liability on my accounting records anymore. Okay, Ivan, continue. Interest expense. Why is this not interest revenue? He's right, but why is it not interest revenue? Right? You're the one that owes the interest in this situation. So when you're paying that interest, decreasing your overall equity, it's an expense, interest expense. So you, again, bless you, just like in this problem, you may see both interest revenue and interest expense in your chart of accounts. Make sure you remember what side of this am I on? In this particular transaction, I owe the interest. So that is an expense to my organization. Interest expense debit 500. And then finally, Ivan, credit cash for the sum of the two. The amount that I owe plus the interest that I calculated. What do we think about May 31st? Any questions on May 31st? June 30th, I'm going to pay for the last 6 months, right? People have been working for us and now we're going to pay them their salaries, $4,000. What's the entry going to look like in my journal for salaries that I'm paying from that I've already used? Donovan. Salaries expense and what do I use to pay it? Cash. Salaries expense 4,000. Cash 4,000. I already used it. Bless you. Right? When you use something up, utilities, people, rent, whatever it is, it's from the past, already been used, it's an expense. You're paying for something that you're going to get benefit from in the future. It's a prepaid, it's an asset. So remember that distinction. We see that distinction again. July 1st. On July 1st, we are going to pay cash for the rent for the first 6 months of using an office space, $2,000. Already used it. What do I need to put in my entry? Ivan. Good. I want some new people to answer my questions with these journal entries. I want to see a couple new hands. August 31st. I received cash from the customer that I had the note with. Right? So if I go back up on March 31st, I provided consulting services to that customer. And I told them they could pay me in 5 months, but that I was going to charge them 4% interest. Yeah.
Cash, short-term note receivable, and interest revenue.
We want to be able to calculate what that interest revenue is going to be. Okay. So again, off to the side, I'm going to do this calculation. Where do I start? Go ahead, Logan.
5,500 times 0.04.
That gives me how much interest? Annual interest. I'm going to take that and divide it by 12. That gives me monthly interest. And then how many months did they have the note? 5 months. Times 5. Right? And with these funky numbers, you can round to the nearest dollar. You can round to dollars and cents. I don't care. However you want to handle it. That's 5 months of interest. So, Logan, what are my debits and credits here, and what are the amounts in my entry on August 31st?
So your short-term note receivable credit is 5,500.
Yep.
Your interest revenue is $92, and cash is $12.
Exactly. So again, I had a receivable. Now I want it to go away because they're paying me the money that they owe. I've earned interest revenue because this is an outstanding note that someone's paying me for. I've earned interest revenue and then cash for the sum of the parts. Everybody cool on that one? August 31st. Brooke. Yeah. If you take 5,500 times 0.04, did you fix it or no?
Yeah.
Yes? Okay, Donovan. Oh, it shouldn't be NT. It should be ST. Sorry, short term. Just fat fingers. Short-term note receivable. I apologize. Any other questions about this one? Okay. Moving on up. September 12th. We are going to provide consulting services to a client, $5,000, and they paid in cash. What am I doing on this one? Noah? Yes. Good. Any questions on that one? What about the 15th? Is today? No, today's the 14th. We received $2,500 cash from a client for a down payment for services, but we're not going to actually do the work until February of next year. What do we need to do on November 15th when we get this cash, but we didn't perform any services? Ambrose. Sorry, Ivan. Ambrose. Absolutely. Unearned revenue. And if you're like, oh, I know I have cash in my pocket, but I know I didn't do anything to earn it, and I can't remember what I'm supposed to use, scroll up to the chart of accounts. Read through each one of those account names, and something will trigger your memory. Okay, that's why it's there. It's there for your reference. Any questions on November 15th? What about November 30th? We declared a $500 dividend to investors, but the dividend is not going to be paid until January of next year. Ivan. With this one, don't get all confused, like, oh, what account, what category? Remember, it's its own thing. When we declare a dividend to our investors, it's its own category. So that dividend account that always decreases our equity is going to be the debit in our journal when we declare that dividend. Okay, so dividends, and then in this case, we didn't pay it immediately, so we have dividend payable. We have this liability. Any questions on November 30th? Okay. Now, December 31st, we have a few things going on. First, we paid cash for then July 1st through now, right, of salaries. So what entry do we record on December 31st related to those salaries? See? When we pay salaries to our employees, what's going to happen to that cash? You're right, it's going to be cash, but what's going to happen to it? It would decrease. So it's going to be our credit. So now this debit has to represent, we've already used those employees to help us generate revenue. We don't owe them anything. We just paid it, right? This is the cash going out. Ivan, salaries expense, right? Because we already used them people up to help us generate revenue. Salaries expense, 4,000, right? It's the same entry that we made on June 30th. And also on December 31st, we paid cash again for the rent, for the office space that we've been using for the last 6 months. Not rent for a future 6 months. We've already used the office space. So what do I need to include in my journal for that? Skylar. Cash and rent expense. 2,000. Nope, that's not it. Right. 2,000 credit, cash, 2,000 debit expense. Everybody cool on those two? If you did them right after the first 6 months, it's the exact same entry. After 6 more months have gone by, we pay more salaries and we paid for the rent that we've been using. Okay. And then lastly, on December 31st, we have 2 long-term assets that over here on the side, I want to use that formula that Isaac was nice enough to give us to calculate depreciation. So let's do the furniture first. The furniture had a cost of what? 20,000. The furniture had a salvage value of what? 0. And a useful life of 5 years. So the formula that I'm using is cost minus salvage value, but it's 0, divided by useful life. If I do that, I will get depreciation of 4,000, but that's annual depreciation. How long have I used the office furniture? 10 months, right? From March 1st until now, I've used this furniture. So I'm going to take my annual depreciation and do what with it? Divided by 12. That gives me monthly. Then I'm going to take that monthly and do what? Multiply by 10. That gives me my 10-month depreciation. 10-month depreciation. $3,333. Okay. So for the office furniture, what's the entry that I'm going to make for depreciation? Then we'll move on to the other asset. Go ahead, Ivan. And again, if you're like, oh, I know this, right? I know that I depreciate and I know I'm not supposed to make the credit to office furniture. What's that dang account name? Go look up in the chart of accounts. It's listed right there for you. Trigger your memory. Okay. So now let's do the exact same thing, December 31st for the other asset, which was what? Computers. What was the cost of the computers? $9,000. It was given to us in the problem when we purchased the computers, right? What's the salvage value? Sky, what's the salvage value of the computers? 500. Don't forget about the salvage value, right? And what's the useful life? 4 years. So if I take cost minus salvage value divided by useful life, that gives me annual depreciation. But I didn't use the computers for a year. Donovan, what's the matter? $9,000 minus 500 divided by the useful life. Everybody okay? I didn't use the computers for a full year. I only used them again for 10 months, same as the furniture. I bought them at the same time. So I'm going to take my annual depreciation divided by 12. That's going to give me monthly depreciation. And I'm going to take that amount and multiply it by 10, because that's the number of months that I used the computers. 10-month depreciation. And again, I'm just going to round to the nearest dollar. Okay, so we use that formula that gets us annual depreciation, then we divide by 12, that gets us monthly depreciation, and we multiply by how many months did we actually use the thing. Okay. Again, one more entry we have to make. December 31st for the depreciation of the computers. Ivan, finish it up. Debit depreciation expense, credit accumulated depreciation for the computers for the $1,771 that we calculated over here, right? So there's our 10-month depreciation amounts that we used in our journal entries. Does anybody have any questions about this? We're going to see a problem on the final that looks kind of like this with different numbers. Okay, so I will post the solution to this in Moodle now that we're done with it. You'll have the template, the blank template, and the solution so you can practice and kind of take a look and see if you got the answers correct. Okay, I would like to move directly on to the financial statement problem. Okay, and instead of giving you time, we're sort of running out of it. Instead of giving you time to work with your friends, I would like us to jump into this problem together. Okay, so in Moodle, If you look right below the comprehensive journal entry problem, fall 2022, here's the financial statement practice problem number 2, because remember, we already did one of these in class earlier, a couple weeks ago. And so you'll have multiple different examples of this kind of problem where you're given a trial balance. Here it is, right? Here are all of the accounts and their balances at the end of our accounting period. And what you're required to do, and actually, I'll do the same thing that I did before. What you're required to do is to prepare those 3 financial statements that we've been talking about all semester. The income statement, statement of retained earnings, and the balance sheet. Which one is it? I think it's this one. Yep. Okay. So what I'm going to do is leave up the balances over there. And I'm going to use my template over here to actually fill it in, right? All we're doing is taking the information from the trial balance and putting it into the financial statement template, okay? Before we do that though, what's the first thing that I have to do at the top of each of my statements, Z? Titles, right? So this is ABC Company. What's the first statement that I make? This is the income statement. And the time period, it tells us December 31st, right? So December 31, 2021. Whoa, nope, not what I wanted. That's not what I wanted either. Short date, there we go. Okay, and I'm going to go ahead and just throw that on top of each one. What's the second statement that I have to make if I'm doing them in the correct order? Statement of retained earnings, again, for 12/31/2021. And then the last statement that I have to make is the balance sheet. ABC Company, balance sheet, December 31st, 2021. A point for each one of those. Okay. So using the trial balance, I start with my income statement. What do I need to pull from my trial balance that's going to go on my income statement? Ivan, what's the first thing? Sales revenue, right? And sales revenue had a balance of 39,300. And I like to keep track. I'm just going to highlight that guy, or maybe just put a check mark next to it. I used him because I can only use them on one statement. Sales revenue. What's the next piece of the income statement? What do we do now? Expenses, right? So I'm going to list out miscellaneous expense, interest expense, depreciation expense, salaries expense, and bad debt expense. And I'm just going to put the balances that were provided to me in my trial balance. 339, 13,400, 1,965. I'm just taking the data from my trial balance and putting it on my income statement. So check, 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 check. Everybody cool so far? To make it easier on myself, I like to do a quick total. I use my little summation formula in Excel, and Excel says, you want me to add this? And I say, yes, I do want you to add that. And that gives me my total expenses for the period of time. What is the last piece of the income statement that we have to include? Net income. And how do I calculate net income? Ivan, go ahead. Revenues minus expenses gives me net income. Everybody cool so far? I can blow this up a little bit. I see some squints. Some squints. Not the Sandlot squints. Anybody watch The Sandlot? A good one. So, statement number 2, statement of retained earnings. If this is the first month that this business has ever been operating, what's my beginning retained earnings? 0. I got nothing. But what earnings have I had this period? Where do I get that information from? The net income, right? This period, I earned net income of $20,218. I'm just going to pull it right from the income statement. Okay, net income, $20,218, directly from the income statement. And then what's the other thing that goes on the statement of retained earnings? Dividends, right? Because think about it. Think about what a dividend is. It's where the organization takes some of their earnings and they distribute them out to their investors, right? So we had net income, but then we decided to give some of that to our investors. So our dividends, 2,500, are going to be subtracted from net income. Net income minus dividends gives me my ending retained earnings balance. And again, on my trial balance, I'm going to check off dividends. I'm not going to put that on another statement. If you put it on one, that's it. You're done. You're done using it. Okay. So 2 down, 1 to go. Everybody cool with the income statement and the statement of retained earnings? Okay. No? Do we have questions? Pull my leg again. Okay. The balance sheet. Where do I start my balance? Did you have a question, Ivan? Yes. Yes, I do. I want this to be a classified balance sheet. And that means that you're going to list them in order of their liquidity, or how current assets are listed first and long-term assets are listed second. Okay. So as we said, we're going to start the balance sheet with our assets. I have current assets as cash, accounts receivable, and along with accounts receivable comes what? The allowance for doubtful accounts. Right? It comes with it. It's not an asset. What kind of account is it? It's a contra asset. This is the only place it can go. It can only go with the asset that it belongs to. Okay. And then I have inventory and supplies. Those are all of my current assets. So again, I'm just going to take the balances from my trial balance and bring them over into my balance sheet. What should I do with the allowance for doubtful accounts amount? I heard it. Make it negative. Right? A contra asset means that it's reducing the value of the asset. So on your balance sheet, on your trial balance, you show that as a credit. Right? But then when we're done with the trial balance and we're getting back to the financial statement, this summary, we go back to positives and negatives rather than debits and credits. So instead of a credit, it's just going to be a negative amount. And then inventory, 16,300, and supplies, 12,450. So again, I'm just going to check off all of my current assets. I've included them all into my balance sheet. Then I can have long-term assets, right? And you can, if you want to put headings in your balance sheet, short-term assets, long-term assets, you can do all of that. Or you can just list them in that order. You don't have to have separate headings. Again, because I understand the time constraints of an exam. I'm not going to be super picky about that, but they do need to be in the right order. You don't have to have headings, but they do need to be in the right order. So I'm going to go forward with my long-term asset. Machine, accumulated depreciation for the machine, and equipment and accumulated depreciation for the equipment. The machine has a value of 12,000. And what should I again do with my accumulated depreciation amount? Should be negative, right? Negative 183. Equipment is 14,000 with a negative 156. And I'm checking them all off my list. Am I done with my assets at this point? Yes? Yes. So I'm going to add them all up. I'm going to use that little summation formula that Excel provides to me. Excel says, do you want to add this? And I say, yes, I do. Yes, I do. What's the next section of my balance sheet? Liabilities. And I'm going to list account payable, unearned revenue, sales tax payable, and salaries payable. Again, I'm just taking these balances from my trial balance and bringing them over to my balance sheet. Accounts payable, 7,200. Unearned revenue, 1,400. Sales taxes, 216. Salaries payable, 1,200. And then I'm going to check them off my list. Boom, 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 boom. I'm done with those guys. I add up on my liabilities. You don't have to if you don't want to. If you're under the gun and you just want to add up all your liabilities with your equity, that's fine too. I'm not going to be super picky. But I'm going to add up all my liabilities. That gives me my total. So then the equity section should consist of what? Say it again. Ending retained earnings, which I get from my statement of retained earnings, $17,718. And what else? And common stock, which I get from my trial balance. It's the last thing there that doesn't have a check mark on it. Now it does. I've used every account one time. Do not, in your equity section, list all this stuff out. Don't do it. Your revenues and expenses have already been put on the income statement. That's the only place they go. Your dividends have already been on the statement of retained earnings. It's the only place they go. You only need two components of equity, common stock and then retained earnings. Retained earnings, which is essentially a summary of these three items. So if I add my liabilities plus my equity, I can see that my balance sheet balances. What do you think? Two thumbs. One in the back. Does anybody have any questions? You're going to see a problem that looks just like this on the final exam. Wait a minute, don't leave yet. On the final exam with different numbers. Okay. That PDF is in Moodle that outlines everything that you should expect to see on the final exam. Wait, don't leave. Don't put your stuff away. Because there's one more thing I'm going to ask you to do, but I'm going to leave the room because it's awkward if I stay here while you do it. Course evaluations. Okay. I would ask, I always leave at least 5 or so minutes at the end of my last class to give you time to fill out a course evaluation. Some students have the perception that you fill out these course evaluations and they fall into a black hole and nobody ever sees them. And I cannot tell you how incorrect that is. Very important decision-making happens based on your feedback for these classes. I have altered my classes significantly based on feedback that I get from students. Hiring, renewing, firing decisions have been made based on these course evaluations. They are really, really important feedback tools. And so I'm going to say for the last time that I appreciate you and that I will see you on Friday for our final exam. And once